Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday. It's August 8th. Again, not a lot on the data today or this week, but today we got the NFIB Small Business Index. This kind of gauges the confidence in the small business industry. And back in June, we had 103.6 on the rating, and the index for the month of July went up to 105.2, which is obviously a good sign, primarily because small businesses do make up the bulk of the jobs out there. So this is obviously a good sign that they're feeling a little bit more comfortable. Well, we're kind of seeing that more in the stock market, which we'll touch on here in a bit. Job openings, good sign here too. May, we had a 5.7 million job openings. In the month of June, it climbed to 6.2 million. So we're seeing a lot more jobs. We're seeing a tightening market where jobs are are becoming a little bit more plentiful. Obviously, the drawback, of course, is we're not seeing the wages going up as much as we'd like, thus keeping the inflation at lower rates here. So here's the headline news. Stock market is currently up. Now, of course, we're all at highs on pretty much across the board here. So they're liking what they're seeing on the stock market, but this really hasn't been any cataclysmic event that's really boosting it or really bringing it back. So it's kind of in this kind of a slow market right now. It's kind of it's still going up, and they don't want to really pull back because a lot of the earnings reports coming out are decent numbers are coming out. You get a few here that are disappointing, but overall you're starting to see the bulk of them coming in with with good numbers coming in here. So let's take a look at the bond market, and as you can see, we did reach upwards. We were testing the first line of resistance. Today we started a little bit lower, and we kind of had this fluctuation. We were down much lower. We touched off the 10-day moving average this morning and pulled back. Now we're about 6 basis points lower from where we left off on yesterday on Monday. So depending when lenders came out with pricing, if it was the East Coast, it may have worse pricing because it may came out when we were down here at 12 basis points. But here on the West Coast, it should be pretty close about the same pricing from what we saw yesterday here. We'll have to kind of wait and see. Again, this week we do have some inflation, which could really be volatile for mortgage-backed securities, as inflation is the enemy for inflation. What we have this week is we have the CPI, Consumer Price Index, and we also have the PPI, which is a Producer Price Index, and that's the inflation for the wholesale side of things. So those will kind of give us a gauge as to where inflation's going, and consumer has been pulled back a bit, just like the PCE has pulled back a little bit over the past few months here. So that pretty much concludes it. Again, this rates are pretty much here on the West Coast about the same as where we left off yesterday. If you guys want to get more data, just come over to Twitter. I do post on Twitter underneath Mike Bjork. You can find me there and catch updates throughout the day. Also, if you guys are in the market for a mortgage, I'm a loan officer. I can help assist you with your pre-approvals on purchase transactions as well as refinance transactions. Refinance has been kind of ranging from people taking money out of their equity, called a cash out refinance, to those who are just wanting to get changed from an adjustable to a fixed, or going from a 30 to a 15-year. There's a lot of different variables, and we can help work you through that path as to what best meets your needs. So feel free to just contact me through email. It's the best way to reach me. And again, I hope you guys have a great day. Thanks so much for watching. I look forward to see you guys tomorrow. Have a good day. Bye-bye.